Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Thursday, December the 21st, and the year is 2023. Let's talk trading. Flip-flop trade with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal. Walmal, you've been pretty successful with the flip-flop trade, so I'm going to pull up your template and let you explain how you do the flip-flop, because I guess I did it a few times, but I don't think we've caught you doing it.
No, I alluded to it, but I really haven't spoken about it. But yeah, it's such a simple trade. And the whole idea with it is it's kind of a reversal trade sometimes, and sometimes it's not. And what do I mean by that? What I mean by that is that you get a trade, you get candles going in a particular direction. So let's say we got, green candles going, and then all of a sudden you get a red candle, which means that it's gone the other direction. And you wait for that candle to close, and then you're just basically waiting for for a movement below the low of that last candle. That's really, in a nutshell, all it is. You're waiting for a state change, of some sort, and then taking the trade in the other direction. So, for instance, if you look right now, candles 1, 2, and 3. So right now, the current candle is candle 0. The one to the left is candle 1. To the left of that is candle 2. To the left of that is candle 3. Well, we had 3 candles in a row that were up candles. Okay. This current candle is going to be a down candle, and it basically is untradeable. So because it's so big, but technically, if it closes right here in the next 3 seconds or so, the next candle after this, if it breaks the low of what's now the brand new candle 1, we go short, and it's just that simple. Now, I put in some other caveats on things just to go and, increase my odds a little bit. Like, for instance, I love it when it happens to line up with indicator 2. In other words, I'm on the right side of indicator 2. What does that mean? So if I'm looking to go short, I want to make sure that I'm below indicator 2. If I want to go long, I want to make sure I'm above indicator 2. And so that just adds a little bit more confidence to me that the trade has a better chance of success. Does it work all the time? Nope, it doesn't. Does it work a lot of the time? Yes, it does. Typically, my efficiency using a trade report is somewhere running between 70 and 85%. So can't complain about that. I mean, you can have something that running that much in your direction that often. That's a pretty good indicator. A pretty good chance of actually of winning your trades. Again, it's like anything else I talk about. It's nothing more than another method, which means that you need to go and make sure that you've got risk management in place. In other words, because it is going to lose, you can't let your losers run on you. Because if you do, then even if you do win 8 out of 10, the reality is that those last 2 can go and take all your profits away and put you into a hole.
Yeah.
And then what do you do?
Yeah, you just had a flip-flop occur right here.
Yep. And so my entry here, just so everybody knows, that my entry would have been at 78.6 going south, below the indicator 2. And then the third thing that I look at is, did I get a state change? And we went from a candle, actually now candle 3 was, the state change on it was red, which means that it's got a lower low. Then the candle 3 was aqua, okay, which means there was an inside bar.
You mean so candle 2 was aqua?
Well, now candle 3.
Really? Oh, mine is candle 2.
Oh, I'm sorry. No, candle 2. You're right. I just counted. I'm sorry. Candle 2 was aqua, so now you had a state change. So where's your entry now? Well, your entry now is sitting out here at, like 78.3 to the south. You've got everything in place. You got a low indicator 2. You got a flip flop. You got a state change. And you look to go and pick up a couple of pips. You could have picked up 6, 7 pips on this one. It would have been a really nice trade. Does that happen every time? No, It doesn't, but it happens often enough. Today I've got doing just this simple little method. I've got 39 pips. I just had to go look at my trade report to see. So I got 39 pips, and I've been lucky today because I haven't had a single loss. Actually, no, I had one loss. Sorry about that. But it's very, very easy and simple. And what I like about it is that using the indicators, the flip-flop box indicator, it's so easy to see it because, it's right there painted on a chart. You almost don't even have to think. You just go and see it. Now, some caveats on that is I know one of the things that, you like to look at is, are you going in the direction of M30? If you're not going in the direction of M30, well, you still can take the trade, but understand that maybe you're only looking to get 1 or 2 pips. If it's going in the direction of M30, well, maybe you can go pick up more, and so that can go and help you out a little bit. Some other things that may help you out is that, this whole idea of, did price have a problem in a particular area? Am I trading in an area that's going to be problematic? What do I mean by that? It's gone into this area before, and it hits this area, and it turns around and goes the other direction. I don't want to take that trade. I get, I don't know how many trades an hour doing this, but I get more than enough trades per hour. So why take a chance on a trade that, potentially, could just go and slap me in the face, and call me silly. And now, the one good thing about it is if you want to take those trades, the reality is if it does break that area, that's usually when we go and take off. You can go and see, a 10, 15, 20, 30 pip. In fact, earlier, remember we had saw that happen and we saw like a 30 pip run, and now a lot of that was because of news coming out, but still, and all set up. So that's my take on flip-flop boxes. Very simple and clean and dirty. Right now, we have a flip-flop box that just set up. You go and enter right at this point right now, which is 2676. But the thing is, here's the caveat behind this one. Why I probably would not have taken this one is because, one, I was below indicator 2 when the trade occurred. 2, I'm trading against M30. So it's just not. I'll wait for a better setup. Why take a chance on a poor setup? You get it. Like I said before, you get enough of these that who cares?
Now the thing is, though, would you take the sell at looks like 2673 area because we just had another flip flop box here? No, that's not the flip flop box. No, I'm sorry. That's a different sell. I think that's an indicator 2 sell.
That's indicator 2 sell because I got that on the.
Right.
Yeah, that's exactly what that is. But
now we got another flip flop box.
Right. But now we're going into a period of some type of consolidation. I don't know why, but we are. So it's sort of like, what? We'll sit here and we'll see what happens. I like to go and see these setting up with some type of range, but I don't want a range of 1 pip. I want a range of about 10 pips or 15 pips. So there's room for me to get some pips out of it. I can't make money on a 1 pip range.
Right. And right now, as far as indicator 2 goes, it's like the only one that's below is on M5. I'm looking at the multimeter here, and just so the traders know, indicator 2 is the EMA 5 compared to the close. So if the close is above, we have aqua. If close is below the EMA 5, we have magenta. And that's something I've done indicator 2 like way back around 2008, I think, is when I came up with that one. Maybe even a little before then. Yeah, maybe, yeah.
It's a long time ago. But that proves a point, though. And that is that, some of these methods and things that we trade or whatever, they've been around forever and they just continue to work, Now, what may change is that the market may change, and so you may have to look at things a little bit differently. What do I mean by that? Well, going back 3 years ago, we were seeing daily ranges consistently on the pound between 125 and 170. I mean, just about every single day, that's where it was at, And now we're seeing ranges. It's actually up a little bit where we're seeing ranges of, between basically 85 and 120. But going back a couple of months ago, we were seeing ranges that were between 50 and 80, for a long period of time there. But so the market does change a little bit. So, but the methodologies still work. It's just that you may have to go and say, you know what? I need to only be looking to get this many pips on this type of a trade because it's just not as much. There's not as much room for it to roam, so to speak. And so you know that, and you use that to go and not change your method as much as change the way that you use your method. And there is a difference. You use your method. It's sort of like you can use a hammer for many things. You can use it in finished carpentry just as well as you can use it, in stick building a house. The reality comes down to, how you use it, and what you do to go and implement it or use it. So if you're using it, for finished carpentry, you're probably holding the hammer very close to the head, tapping very, very gently, and you may be using another tool with it.
Okay, so we got a flip-flop box happening here. Would you take this one? I'm sure the traders want to know.
No, because I would have taken, my entry would have been all the way down. My flip-flop box would have actually happened at 76.6, which was on candle 1-2. That one I would have taken, yes.
Yeah, but you were below M30 though.
I was below M30.
The M30 open, that is.
Yeah, and also I was below the indicator too. But if I was taking it, I would only be looking to get a pip. Now, here's what I was talking about before. If it does break it, okay, the nice thing is you can pick up a bunch of pips. You could have picked up 5 pips on this trade. But again, I personally would not have taken this trade. But it's a trade that's tradable. And sometimes you can win, sometimes you lose, and that's just the way it is, unfortunately.
Yeah,
and part of trading, guys.
Yeah, and just one thing for the traders to notice that here's the weekly open down at 2671 area, at least on my broker. We just turned M30 and H4 green right here. So that if this thing moves, it could, as Walmal said, this thing could take off. We could go all the way up to 2700.
Right. And this is a perfect example of what I was talking about. See, when you break that range, okay, the reality is 9 times out of 10, it doesn't break the range. The thing is, though, when it does break the range, bam, it takes off. I mean, from that trade, I know we're running out of time here, but from that trade, could have picked up 8 pips. Would have been a beautiful trade for 8 pips. But the reality is, more times than not, it doesn't work out. So you only look to scalp like a pip or so.
Yeah, and
that's me.
Yeah, and for those traders out there that would poo-poo the 8 pips, once again, it's easier to lift 1 pound 1,000 times than it is to lift 1,000 pounds once. And so, these little trades that Walmal and I, talk about, 2 pips here, 3 pips here, 4 or 5 pips every now and then. Like you said, you've got how many trades and how many pips today, Walmal?
I got 9 trades today, and I got 39 pips.
So that's all. That's about what? That's a little over 4 pips a trade. So that's some trading that you can, like what you do, you make a living off of it. So, and the thing is about these methods, traders see methods don't work. Traders work the method. You have to understand that, because as the turtles have proved, and I've said it before, you can teach the same a group of people the same thing at the same time in the same way, and some will be successful and some won't. And that's because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.